Today, we'll watch videos of the CEOs of ride-hailing app Uber, Dara Khosrowshahi, the CEO of the ride-hailing app Lyft, David Risher, and the CEO of electric vehicle maker Rivian, RJ Scaringe, as they each reported their Q2 earnings. Uber's earnings per share and revenues beat expectations, and gross bookings actually grew 19% compared to last year. Lyft also beat expectations across the board, except for a small miss on gross bookings. Rivian's Q2 showed a mixed performance. So let's dive deeper. We'll watch those videos and look at their results. I've got Brian White joining me. He follows both the ride-hailing apps as well as these car companies, electric vehicles, closer than I do, actually. So thank you so much, Brian.
It's an exciting field. I don't know why more people don't follow it, except that there are only so many hours in the day. And even for people invested in these companies, if you have a job, you kind of have to lean on folks like us.
Yeah. Okay. Well, I lean on you a lot. Thank you for doing all this. So let's take a look at this data here. Uber Technologies Q2 2024 results. Gross bookings grew to a 19% year over year. The mobility gross bookings 20.6, and the delivery also grew 16%. And then they reported net income of $1 billion. So surprisingly, even the CEO was saying he still has not seen the recession or the economy impacted. Let's watch a little bit of his video.
Uber out with its second quarter results just a few minutes ago. The company beating on both the top and bottom lines. Uber coming in above mobility estimates, but a little bit shy of expectations on delivery. And then I want to talk about the guidance. Joining us right now is Uber CEO Dara Khosrowshahi, and it's great to see you, sir. How are you?
Great to be here. Thanks.
We've been watching the markets, obviously, but a lot of questions about the consumer, about growth in this country. You are perhaps one of the better barometers of all of this. So let's talk about this past quarter, but let's also talk about where you think things are headed.
Well, Andrew, I think our results that were incredibly strong speak for themselves. We had gross bookings of $40 billion, up 21% year on year, which is very similar to what we had last quarter. Chips growing 21% as well. Record adjusted EBITDA of $1.57 billion, up over 70% on a year-on-year basis. And it translated into free cash flow of $1.7 billion. So the company is really hitting on all cylinders. And what we see for the consumer is the consumer remains strong, especially in terms of their demand for our services. Past the pandemic, the consumer spend on services continues to be growing at higher rates than consumer spend on retail. And that's absolutely showing in Uber in terms of our performance now and our performance going forward. And we've also looked at, different income cohorts of consumers as well. For example, lower income cohorts of consumers, they're actually growing their spend faster on our marketplace than higher income cohorts of consumers as well. So even when we dig to see, are there any early signs of weakness? We don't see any early signs of weakness as of now, although we're always on our toes to be able to perform.
Do you think of yourself then as a barometer of what's happening in our economy or around this country and frankly the globe, given just how international the business is? Or do you think that you're living on an island and it's an idiosyncratic island and we shouldn't take too much away from it except to say that it's working for Uber?
Well, with 30 million trips a day, it's a pretty big island. But I would say that we've consistently proven that we can grow faster than the category. So I think that's something to take into account. We're the largest player. We've got the best technical capabilities. So I think we will do better than the overall marketplace. And I do think that there are certain elements of Uber that are countercyclical. When the job market weakens, we get more drivers on the platform. We've got 7.4 million drivers and couriers on the platform. They earned $17.9 billion, up over 20% on a year-on-year basis. So as more drivers come onto the platform, ETAs come down, prices come down. Our merchants, for example, for Eats, are offering 70% more in terms of merchant-funded offers. So we're a channel that can really push demand when businesses need it, or individuals like our drivers need to make some extra cash.
I'll pause there. Interesting, isn't it? Very, very interesting. They're expensive. I mean, it's crazy how Uber and Lyft, like I just went to the airport, both for Seattle as well as Los Angeles. They are crazy expensive these days. So I'm shocked that the consumer is still using them and growing. Yeah.
What's the alternative? The alternative is, I mean, apart from getting a ride to the airport, which if you had one, you wouldn't be looking at Uber or Lyft, is a taxi. And taxis are also prohibitively expensive and an objectively worse experience, because if you could rate your taxi, which you can't, I don't know how many of those rides would get over 2 or 3 stars. So it's tough. And this is a industry ripe for disruption. I wouldn't invest in Uber in the past, and I've said this because I have serious concerns with their ability to manage their own data and understand where their problems are. And I wouldn't invest in it in the future because it's going to go the way of the dodo. It's great that they're showing signs that the recession is not happening, but that's secondary to their survival. And I just don't know how they're gonna make it.
Yeah, good point. I mean, I don't know if this is the right terminology. It's like it's a red herring. You see that their revenue, everything's going up, revenues beat, and earnings per share, mobility. He did say that they're beating the Lyft, and that's where they're winning business for sure. But boy, why would you? These guys are going to be. I'm not a believer that they'll succeed when autonomy comes and robotaxi comes. They did partner recently with BYD. But BYD partnership is simply a transactional one. BYD drivers will be offered good financing to try to buy, Uber drivers will be given good financing to buy BYD cars, not in the US, but many other countries in the world, China, Europe, and other countries. That's all it is. And then BYD is just going to market Uber, try to sell more of their low-cost cars to Uber drivers. And then they both said, oh, we'll work on robotaxi, but neither have any movement there. So it's a red herring.
I don't know if BYD has any kind of progress to show on self-driving. We know Uber doesn't. They had their big division that they pumped billions into before selling it off for scrap. So we don't know on that. But who on earth is going to take an Uber with a human driver when driverless becomes a thing? Uber's best bet is and they know this, to get into driverless themselves. So it's great that they're putting $17 billion into drivers' pockets, but that's the $17 billion they hope to take back out of drivers' pockets. And even then they're going to have to cut prices because it's prohibitive. But then they can better manage with surge pricing. And who knows what their actual strategy is, but it's not to pay humans, because that's something they famously have been sued for 1 million times.
So this reminds me of what happened to Blockbuster the years before. So if you look at
revenue.
Netflix.
Record revenue.
Exactly. Yeah. Netflix came on board, and Netflix had 2% market, then 5%. And then, of course, after they hit 5%, 15%, but Blockbuster's record revenue, and then all of a sudden, boom, it fell. Once Netflix hit 15%, it crashed. Now, I get it. I've studied the whole business model. They failed because they overloaded on real estate. That was one of the reasons, but it's an example of what happens, quite common. The legacy technology keeps going up, and you're going, oh my God, they're fine. And then all of a sudden it crashes.
And then all of a sudden it's over. And we saw it with BlackBerry, and we've seen it with others where, it's where they flame out. Yeah. Big, and gone.
All right, let's take a look at Lyft, another ride-hailing service. This is their Q2 earnings. Earning per share was 1 cent. But they're expecting to have a loss. Revenue is 1.44 billion. Estimated was 1.39. So they raised revenue. The rides 205 million. It's about flat. And the bookings were about flat or even slower. So they had a little bit loss in the bookings. Let's listen into the CEO of Lyft.
We were talking this morning about Lyft reporting its second quarter results. Just did that earlier this hour. And join us right now on the set, in person no less, with those numbers, is Lyft CEO David Risher. And it's great to see you here, sir.
It's great to be here.
So let's talk about these numbers, because you blew out and beat expectations across the board. Yeah. At the same time, we were talking about guidance for the future, a little bit lower than had been anticipated, and the stock actually is under some pressure this morning as a result of that, I'm afraid to say. Yeah. And so I think we just want to understand, A, what just happened, but also, B, to the extent that you're a barometer or a signal of where you think the consumer's headed in this country,
what's going to happen?
Is there more challenges to come? Exactly.
So what just happened? So what just happened is we had our first profitable quarter ever in the company's history. And that is a big deal. And I'm going to look right at the camera here and say thank you to the team, because the team worked incredibly hard over many years, but obviously over the quarter to make that happen. Record rides, record riders, revenue up 40% year on year, profitable quarter,
right,
and free cash flow for the third quarter. So all those things are good. And by the way, faster pickup times, best pricing we've ever had. So literally every service level looking good. Look, when we look to the future, I remember I was just telling you this. Jamie Dimon gave me some advice when I took the job. And he said, just be careful about predicting what you can't predict, what you can't know and can't control. And what we can control is great pricing, great ETAs, great everything else. But we also want to make sure we deliver. And we're just super focused on that long term.
So what is that? Are you trying to say that the guidance is, you're hoping to just sort of set a floor and beat the guidance?
I mean, look, every CEO probably sort of wants to beat the guidance. I don't want to make a prediction different from what we've already said, but I can just say that our goal is always to do what we say we're going to do.
What do you see happening in this economy? Because we're all having debates every day now. The market's down. There's questions about what the Fed is going to do. There's questions about growth in the country, the consumer. Are you seeing anything? And,
really
we talked to your competitor yesterday. He said he's seeing nothing. And so we're all sitting around going, if these guys are seeing nothing, what are we talking about here?
Look, here's what I see. I see, 2 million people a day taking rides to get out to, the airport, to go to work, to go to school, to go to whatever. Lyft is a really important part of a lot of people's lives every day. Millions and millions of people's, riders and drivers' lives. And we don't see anything to worry about. We just don't.
How much of the business right now is the consumer on their own versus B2B business travel?
Vast majority is consumer.
Vast majority is consumer.
Yeah.
Is that something you hope to change over time? I think Uber has taken more business.
Yeah, they've gotten a little bit more with business. We were probably a little bit stronger on the consumer side relative to them, but on the other, well, I don't know, relative to them, I'm not really sure about those guys. What I can tell you is we've got some segments like healthcare, like some B2B commute and some other things that are business focused. But largely, we really, we love all of our riders, and we really love the consumer side.
Where do you have pricing power? We were talking about price competition.
Sure.
In some cities, it's been a race to the bottom, which is not good. That race seems to be over for the most part. But I think there's still a healthy competition taking place.
So there's healthy competition. I'll tell you where we're really interested right now. We are sort of open up in a can. What am I saying? We're opening up in a can of whoop ass on surge pricing. That's the thing we're really focused on.
When was the last time somebody said they opened up a can of whoop ass on our air?
Totally support you're saying that.
Do you appreciate that? Thank you so much. I thought about it a little bit and I decided I think I can go for it.
Whoop ass is good.
Whoop ass is good. And we were opening up a can of whoop ass.
Not great ways to say it other than saying whoop ass, if that's what you want to say.
And honestly, I looked it up. I used ChatGPT. It said, nope, you've come up with the best way to say it. But the thing is, it turns out that riders really don't like it. They don't like the variability. And we've seen prime time, that's what we call it inside, surge pricing, go down 25% Q on Q. And that's part of the reason why we're getting great growth. So we actually have a new feature. It's called Price Lock. And it allows people who commute to basically lock in a price for the same route every single day for a couple of bucks. It's going to be a great feature. So we're really focused on that, on competing super hard, growing super fast, and that's kind of our focus.
Yeah, I like those guys. I like Lyft. They are a little bit cheaper in my area certain times than Uber, but again, there's no such thing as price competitiveness anymore. It's gone back up to how much higher do you guys want to charge? Because I want to charge higher.
Well, and he's saying, well, we can predict the ETA, we can predict the rates. No, you can't. No, you can't. Those are things you definitely cannot predict. And he's saying that, it's good news because surge pricing is down. Is that good news? Because that would just push drivers back over to Uber. And it'd be, and there's going to be a rush hour. There's always going to be a rush hour. Surge pricing simply will exist. So I don't know, man. I think that's a lot of platitudes to the market about things for which there can be no certainty.
I guess you're right. Yep. Same thing applies to Lyft. These guys are ride-hailing apps with humans. Neither Lyft or Uber seem to have made any progress. We'll wait to see if they make announcements for autonomous driving, but they don't need to do that. As far as you and I are concerned, people think that it's not going to be around for 10 plus years and they're fine. So let's take a look at Rivian. And we also have update on Lucid as well. Rivian is one of the kind of upstarts for electric vehicles. We love them. We want them to succeed. They're losing money. And we'll take a look at what's happened here. So their update yesterday was their Q2 production delivery figures. They produced 9,600 cars. They delivered 13,000 cars. So it's still tiny. They reaffirmed their annual target of 57,000 vehicles. I've repeated this many times. I've heard and understand that you want to get to 200,000 vehicles per year. That's when you start getting scaling and ability to reduce your costs. Certainly that's what happened when Tesla did that, 2012, 2014, like that. So this is beautiful cars. You know, they're selling, but they just can't produce them enough. Their net loss in Q2 was negative $1.4 billion versus 1.2. So they increased their spend, not reducing their net loss. So it says a mixed performance. It was affected because of plant downtime due to retooling upgrades at their Chicago factory, Illinois factory. Rivian delivered 13,000 vehicles. The revenue was up 3% year over year, primarily driven by vehicle sales. Their net loss of $1.4 billion. The end of the quarter was $7.87 billion in cash, and $4.4 in long-term debt. So the cash total includes $1 billion from a convertible note issued to Volkswagen because they have this planned 50% joint venture. So that's going to be interesting. We watched the video, he does address that as well. So what's your thoughts on that before we go to the video?
I love it. So first of all, we knew that they were going to be doing some retooling. We didn't know what for. The changes appear superficial. I went into the Laguna Beach showroom, their flagship showroom in California, and got to talk with a representative there, a former Tesla employee who now works at Rivian. And he, of course, couldn't speak on the record, but he could talk with me like I was a consumer. One of the things they did was removed 1.6 miles of wire. They dropped 44 pounds of wiring out of that car for the new generation of the R1S and R1T. And those are the kind of efficiencies you want to see. Not because 44 pounds of copper is expensive, though it is, but because all of the work that goes into putting it into the car, keeping it running, the warranty repairs on something that much more complicated. These are the kind of improvements you need to see in a vehicle if you ever want to become profitable. The fact that they still have $7 billion in the bank, plus $7.5 billion, means that without any changes, they're still going to survive for another couple years. And seeing them sell down inventory like that, they had too much inventory left at the end of last quarter. The fact that they could sell down 4,000 units that were available, it is very encouraging. And we're seeing, they do have the van. It is selling. It is not, I believe, selling at a profit. Otherwise, it would be the biggest thing that they would be pushing. And then next you've got the R2 and the R3. Those are going to help, provided they can survive long enough to get there, which I believe they can.
Yeah, let's watch his interview.
Shares are falling despite beating revenue estimates and posting a smaller than expected loss in the second quarter results, down about 4.5% right now. Joining us now is Rivian CEO RJ Scaringe, along with our own Phil LeBeau. Phil.
Thank you, Morgan. RJ, let's start off with the second quarter. Smaller than expected loss. What are you noticing right now in terms of demand for your EVs in the market?
Yeah, we, as you saw for second quarter, our production was down. We made some changes to our production line to update the vehicle for our Gen 2 vehicles. But sales really exceeded what we produced because we continue to sell through our Gen 1 inventory. And we see a lot of excitement for the products. We're really pleased. Even just last week, we saw J.D. Power list us as the #1 brand in their annual appeal study. So we're continuing to see excitement around the product and certainly working to get more of those Generation 2 vehicles into customers' hands.
RJ, you end the quarter with just over $9 billion in liquidity. That includes $1 billion from Volkswagen with the deal you made in the quarter, and you've got another $4 billion on the way. Is that enough to get you through to R2 production in 2026?
We talked about this in the past. For us, the launch of R2 is really critical. It gives us a product that really allows us to access a customer that's much more price sensitive, to get us into that sub $50,000 price point. And the financing we have in place not only takes us through the launch of R2, but also takes us through positive cash flow.
It's great to have you on. I got an entire packet here of analyst notes, analyst questions, lots of them. Wall Street wants to know more about this VW partnership, what this looks like, why it's important, why it's happening now, the details around it, and how it's going to change the competitive landscape for Rivian.
This is something that we've certainly been at work at for a while, and it demonstrates the strength of the platform that we built, the electronic stack, the associated network architecture, and of course the software that's running on it. And we're really excited about the opportunity to take that platform between our electronics and our software and apply them on a global basis to a lot more products and to have that help drive the transition towards electric vehicles.
RJ, what do you see as the impact of perhaps a slowing consumer? Is your customer so high-end and your market share in the position where you don't think it has an effect on you, or does it perhaps make the availability of more affordable options more important?
Yeah, I think it's hard to predict exactly what happens from a macro point of view. Certainly, we're watching it very closely. But as it pertains to our flagship product, the R1, it continues to be one of the best-selling vehicles over $70,000. We see that continue to be the case, and the excitement around the product and what it offers remain. But very importantly for us, as I said before, is R2. And R2 really represents an opportunity for a step change in volume as we introduce something that has a price point starting at $45,000. And that segment really has very little choice. There's a lack of products for customers to choose from that are thinking about electrification. And we believe there's a lot of latent demand that's sitting on the sideline that's continuing to buy internal combustion or hybrid vehicles because there's just not a choice that fits their brand needs or their vehicle package needs.
RJ, one last question. You lost $32,705 per vehicle that you delivered in the second quarter, and yet you guys are still forecasting a modest positive gross profit during the fourth quarter. How do you get there?
Well, it's the move from our first generation to our second generation vehicle had a bunch of consumer-facing benefits. The vehicle is fundamentally better than what we produced with Gen 1. But importantly, we've talked about this now for a while, importantly, it drove significant cost improvements into the vehicle, both because of changes in the way the vehicle is built, but also in the way that we've set up our bill of materials, how we've negotiated with suppliers. And what we see for the Q2 numbers doesn't have any of these updated vehicles in them. And it also has the challenge of, for roughly a third of the quarter, 1 month of the quarter, our production was down. So we had an inefficient quarter as we made these significant changes to the vehicle, took down our manufacturing line, made big improvements in efficiency. And so we're going to start to see cleaner performance in terms of the new bill of material structure and, of course, the new operating structure, where the plant's now running at a 30% higher line rate than what we had previous to the shutdown.
Okay, hopefully he's right that he has enough money to take him to R2, sub $50,000 car. What would you take out of that?
I've never seen RJ look quite that beaten. He seemed not himself. It's like we discovered Clark Kent's kryptonite and its analyst notes. If he takes those glasses off, though, watch out. Mm-hmm. 45,000 is going to be a real tough price point at which to pull a positive margin on that vehicle. I was expecting to see them pare back the bells and whistles with R2 and 3, but they've added more bells and whistles, and I don't get it. The J.D. Power, I don't have the highest opinion of J.D. Power, but the survey in question was brand appeal, and I think I can agree with that. It is an appealing brand. It speaks to fun. It is a fun brand. It is a cute car. It's got solid performance. And at least on the R1 TNS, those are the best $100,000 cars you can get for $80,000, which is instant value. And like he was saying, you're upside down 40 grand a unit. How are you going to fix that? And he's talking about things like economies of scale, but you don't have scale. He's talking about negotiating better deals. There's only so good the deals can get. You're not going to get 40 grand out of that. And the efficiencies they've added, I'm just concerned that their cash burn is going to eat them alive before they can get it sorted out.
Okay, thank you for that. So let's just take a summary of what we're seeing here. This is Lucid. Also, just very quickly, I don't have the video or information on them too much, but Sawyer Merritt put this together for Q2 2024. Here's how you compare the pure play electric vehicles. R&D spend per quarter, or in Q2 anyways, Tesla spent about $1 billion. Of course, they're spending that on AI and data centers as well. Rivian, $428 million. Lucid, $287 million. And then revenue, $25.5 billion for Tesla, $1.1 billion for Rivian, $200 million for Lucid. So they are much less sales, Lucid, of course, and they're losing a lot of money, negative $800 million. So Rivian may make it through. I'm not sure Lucid will, but they did apparently just get an additional, 1.5? I don't know.
Correct.
$1
$1.5
from Saudi.
So
investors.
just, you can leave this up for a second here.
Yeah.
On these R&D numbers, I think Tesla's R&D spend is shockingly low, but they're very efficient at it. In terms of Lucid's R&D spend, it feels high, but we know what they're trying to do with that money, and I can see where it's going. They're trying to get the Gravity off the ground, and they're trying to get the midsize into production. And the midsize is going to be very expensive. I think 287 is probably right. In terms of revenue, this is a great quarter for Lucid. They had revenue of 200 million, but yes, they're losing 4 times that, or they're losing 790 million. Yeah, so 4 times that. That's breathtaking. Mm-hmm. That is genuinely shocking. Their infusion from, and you can pull it down now if you like, the infusion of 1.5 billion from the Saudi PIF is huge. They're buying more stock in the company. The market cap was only 7.5 billion, and a new 1.5 billion of shares was issued. Shareholders, retail shareholders, anybody who held shares prior to a couple days ago just got diluted by about 20%. And that's only going to carry them through next year. So they've got to, I mean, if you're losing 700 million in a quarter, how long that 1.5 billion is only going to last you 6 months. So there is no such thing as maximum pain for the Saudi PIF. This is a rounding error. Billions is a rounding error for them, and they will continue funding Lucid until they get bored of it. And the only question is when that will be, and if it will be before or after Lucid goes broke.
Oh, love it. Thank you for the update. Appreciate that.
Of course.
That was great. We covered quite a bit. Rivian, Lucid, Uber, Lyft. We'll see what happens. This pressure from Tesla is happening across the board, not only in the vehicles, but now autonomous driving. Thank you so much, Brian. Follow him on his YouTube channel. You can see how brilliant this guy is. Today, not as many jokes today, dude. A little disappointed. Very funny sometimes.
I made a Superman joke.
You did. And also that whole thing where you can take down the slide now, put me back on the big screen. You did do that. I was just joking. Thank you so much. Follow Brian at FutureAza. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.